What are the qualifying child rules for single-parent tax deductions? Imagine saving hundreds of dollars on your taxes just because you know the right rules about your child. That's what understanding the qualifying child rules can do for you. If you are a single parent, knowing these rules helps you claim the right credits and deductions. It's not just about filling out forms. It's about making sure you get the benefits you deserve. The IRS has specific tests to decide if your child qualifies for these tax perks. These tests are called the qualifying child rules, and they cover four main areas. First is the relationship test. Your child must be your son, daughter, stepchild, foster child placed by an authorized agency, sibling, half-sibling, step-sibling, or a descendant of any of these, like a grandchild or niece or nephew. Next is the age test. The child must be under 19 at the end of the year and younger than you, or under 24 if they are a full-time student for at least 5 months during the year. There is no age limit if the child is permanently and totally disabled. The third is the residency test. The child must have lived with you for more than half of the year. This is very important because only the parent with whom the child lives most of the time can claim them. The last is the support test. The child must not have provided more than half of their own support during the year. This means they shouldn't be paying for most of their own expenses. When more than one person could claim the child, the IRS looks at who the child lived with the longest. If the child split time equally, the parent with the higher adjusted gross income gets to claim them. For single parents, filing as head of household can be a good option if you are married at the end of the year, pay more than half of household expenses, and have a qualifying child living with you for more than 6 months. This status usually lowers your tax rate. The child tax credit for 2024 allows a single parent to claim up to $2,000 for each qualifying child under 17. In 2025, the refundable part of this credit can be up to $1,700. But remember, the credit begins to phase out if your modified adjusted gross income exceeds $100,000. To make sure you get these benefits, keep records showing your child's relationship, age, residency, and support. Filing as head of household and claiming the child tax credit can really help reduce your tax bill. Knowing these rules helps you manage your household finances better and get the most from your tax benefits.